Hi there, welcome to Markets Tomorrow right here on ED Now in the Mumbai News Centre. I'm Tanveer Gill, and it was a fairly nervous session for the markets at close, and especially the last 15 minutes the market sold off a bit. That was not the case with the broader markets, but we came off the day's highs there as well. However, there was a lot of stock-specific activity based on news that we will address through the course of the show. Voices lined up, and we will have an in-depth discussion about how you need to approach trade tomorrow with Mayuresh Joshi, talk about the key movers and shakers in the market today, and highlight the key trends as well. Starting off with our top story then, and the Nifty cracked in the last 15 minutes, closing low by about 1% for the index. NED Now Impact, we spoke with the management of Vishman Pharma that clarified the formed 483 issue as being resolved, so that gave some semblance to the stock's performance. It recovered all its lost ground to close flat, in fact in the green, about 1% higher. Then there was news on Amtech Auto. The stock rallied from its recent lows. Bharat Forge, Mahindra CIE have shown interest for India assets, so state agencies, and that brought about a fair amount of excitement in Amtech Auto. Bhushan Steel was up nearly 13% on asset sale reports. Again, that was enough for keeping the stock active and seeing greater participation. Another ET Now exclusive in Reliance Infra, it seems, has got 8 bidders in fray for its cement business. Remember, the ADAG group of stocks have been in focus on the back of the whole deleveraging exercise, reducing the debt on their books, whether it's RCom, Reliance Infra. So it seems like this is something that the group has a strategy to get out of its non-core assets, and that's rubbing off. The stock was higher by about 3% in the session as well. Another ET Now exclusive, and sources suggest that JP as well as Shree Cement are likely to strike a deal where Shree Cement is likely to buy the Bhilai JP Cement unit. And that's source-based information, but enough to keep Shree Cement in focus. The other bit is what has been happening with hotel stocks over the last 2 days. Smart money buying has been seen in hotel names. There is talk, of course, on how the Maharashtra government is likely to boost investment in tourism, and that is giving its due fillip to hotel names across the board. Kamath Hotels particularly did very well in the session today. The key question, however, that we are asking is, given the liquidity environment globally and given the push that the EC may give to the Eurozone economy by expanding stimulus in Europe, would that be enough to drive emerging markets and India in specific? Mayuresh Joshi joins in, like I said, to answer all those questions. Mayuresh, do you think that the liquidity required to take the markets higher from here, given key macro triggers, if they qualify, especially if the GST sees the light of the day, would come in from Europe, and that would take the market higher, go past 8,000?
Good evening, Tanveer. I think clearly, you're probably talking about 3 trigger points. One, in the domestic scheme of things, if the GST does go through, it's going to be a big sentimental push through for the Indian equity markets. On the international scheme of things, clearly I think what the ECB does with its rates is going to be a determining factor. But again, I think it's not going to create huge amount of a liquidity push through into the emerging countries, because I think the Fed meet is going to happen on the Feb 15. So I think what basically happens there, and if the rate hike happens, clearly I think there will be some amount of push through to the dollar. So clearly I think a lot of events expected to happen over the next few days, and that will have some amount of telling effect in terms of how sentiments pan out, specifically from the Indian equity markets. Having said that, I think we still believe if all these events do take place, I think if the GST goes through, if the ECB stimulus comes through, and again if the Fed hike happens, I think the markets might just gyrate in that range of 7,500 on the Nifty on the lower side to 80 to 8,300. And it's really the earnings that will give a push up to the markets from here on.
Okay, so where do you see the market's range actually going forward into 2016? Do you think we would labor in between 7,800 to 8,000, or there would be a breakout past 8,000?
So clearly, I think if the GST does come through, I think the revenue collection will be quite substantial in the second half of FY17, and it all depends on the kind of rates that they finally arrive at, both the parties, in terms of a consensus. But again, there is lots of ifs and buts. But clearly, I think with the commodity price correction that we've witnessed, that will have a very compounding effect in terms of how earnings pan out. And our old take is that first half, specifically the second quarter of FY17, the earnings recovery should start coming through. Having said that, I think the government spending that has already taken place and the push through that will happen in the latter half of FY17, in the remainder 3 months of this calendar year, you're probably going to see some amount of capex recovery also start coming through in the first half of FY17. So we're keeping our fingers crossed in terms of earnings recovery starting to take place in FY17. And if that really happens, I think you're talking about a double-digit earnings growth. Couple that up with if GST is cleared, and again, I think we would have by that time, I think the Fed hikes behind us. You might probably have whatever happens with the Eurozone as well, and also the Chinese data points. So clearly, I think the markets will then relook at how India is positioned in the global scheme of things, and then the Indian markets might just re-rate themselves from the second half.
Okay, fair enough. Some of the movers in the market today, and let's talk about your outlook there. Dishman Pharma, that big recovery coming in from the lows. Pharma broadly has been plagued by concerns and US FDA warnings, compliance requirements there. But the way the stock came back to close higher about 1.5%, you can see the swing it witnessed in the session close to about 40 odd bucks from the crack it witnessed to the recovery. Do you believe, Mayuresh, that there's, all those issues regarding Form 483 are behind?
So in the case of Dishman Pharma specifically, Tanveer, I think the earnings have been quite stupendous over the past few quarters, and our own take is that the CRAM segment has been holding out very well for them. If you talk about their carbogenapsis business, they're having an order book of close to 675 odd crores, which gives good revenue visibility. Again, the management is very, very hopeful, specifically on its oncology business with the Hippo 9 unit division, that they will have EBIT margins and an increasing order book and EBIT margins close to the tune of 40-50%. The vitamin D business is expected to touch 300 odd crores with margins of 20%. Now they're sweating their assets pretty well with fixed capex coming down to 50 crores over the next couple of years. The return ratio, specifically ROC, is improved drastically, close to that 10-10.5% mark. Whether that is all in the price, we probably think so, because I think we had estimated a 10 to 15% growth in terms of top line, bottom line growing at 16-17%, and at 16.5 times, I think it's looking fairly valued at the current juncture. So we had a strong buy recommendation around that 160-170 odd mark, but a lot, in my opinion, has got just stated in the price that the stock is currently trading at.
Okay, the other story of the day, and Reliance Infra, what are you picking up? Either ways, ADAG group of stocks have been in focus. The whole deleveraging exercise, reduction of debt is pretty much seeming like a priority. For Reliance Infra, two pieces of news: a source-based information suggesting their subsidiary in the defense arm is looking at 12 licenses across, supplies of defense equipment, technology, ammunition. And then, of course, the ET Now exclusive that they are looking at sale of non-core assets as well, especially their cement business. 2.5% up, 456. What's the call on Reliance?
So clearly, I think the defense business is going to be a very long drawn-out story. When you're talking about their power business, the power business is something that has let them down. And though I think the approval mechanism has come through in terms of crop subsidy charges that they can recover, I think the cement business and the metro business is something that is letting them down. So clearly, I think the deleveraging exercise that the Reliance Group, especially the ADAG pack, is doing, I think that is a must and the need of the hour. So if you talk about Reliance Infra, I think the road projects, I think all 11 projects should be operational, with one project expected to come through. And clearly, I think in terms of contribution, I think the power business has to contribute significantly. So any debt deleveraging exercise which takes debt off the balance sheet is going to be a welcome sign on the street. And clearly, I think if that probably comes through, you might see, I think, further upgrades probably coming onto the stock. Whether that is applicable for their other companies, I think Arcom, Reliance Power, I think I'll be a little bit skeptical on the other two stocks, more or less to do with the kind of net debt to debt equity. And again, I think if you compare both these ratios for Arcom, I think it's still at higher level. Net debt to annualized EBITDA close to 5.5 times, which is not very comforting. And a lot in terms of the optical fiber sale, the telecom tower sale, will get their assets go through. And if they go through, I think deleveraging and the debt does come through at 39,000 on Arcom's books. But clearly, I think, in my opinion, another 10-15%, and I think it's largely factoring on an SOTP basis. So I think Reliance Infra is where I would remain positive. But again, I think I would buy the stock on declines, because I think a lot more has been talked about all these stocks over the past few days.
What about Amtech Auto? Talks of Again, selling non-core assets, German arm, Bharat Forge and Mahindra CIE looking at India assets too. And this is pretty much in line with what the management had indicated about how they are looking at raising cash to reduce their debt. So again, a debt problem which is being resolved.
So yes, I think and the street is very, very hopeful of that happening pretty soon. But again, I think let's understand that around 12,500 crores of debt onto the book, the deleveraging exercise is a must again for the Amter Group. Clearly, I think if the whole exercise does take place, I think one really needs to understand at what valuation the deal goes through. And with the remainder of the business that probably stays with the Amter Group, what kind of cash flows are you looking at in terms of the rest of the contribution happening if the asset sale does go through partially or fully? So in that sense itself, I think A, what kind of valuations come through, and B, the remainder business, whether it is expected to do well in terms of expectations in earnings. So clearly, I think a wait and watch. So at this point of time, I think we're largely neutral onto the stock.
Okay, likewise for Bhushan Steel too, low price stock, which is why you're seeing that big move in percentage terms, 13% higher in the session, might get 3,000 crores from asset sale. Would you think that some of these names from the commodity basket can offer value on account of just raising cash and perhaps biding their time in a cycle which is going through a downtrend, the commodity cycle essentially?
Oh, clearly, and again, I think if you talk about both the ferrous and the non-ferrous cycle, I think it is going to a very torrid patch and it's not expected to recover soon. Having said that, I think the deleveraging exercises that these companies are undergoing in specific cases, I think it is a need of the hour again, Tanvir. So I think it's not something that they are they're willing to do. I think they must do that probably, and they need to do that because I think they need to reduce their interest and finance cost. Otherwise, I think with the kind of realization that you're probably talking in the commodity space, along with the volume degrowth that we've probably witnessed, I think the balance sheets will look in a much worse state if the deleveraging does not happen over the next few quarters. So clearly, I think the deleveraging exercise is a must for all these companies which are highly levered. But clearly, I think commodity space is something that will underperform over the next 2 quarters, seeing the Chinese demand-supply situation, looking at LME realizations. And again, I think the volume's not recovering as fast as one really expects.
Oh, yes, indeed. Another ET Now exclusive, and sources are indicating that Shree Cement is likely to buy the Bhilai JP Cement unit. Do you think that consolidation in the cement sector has already started in bits and pieces, Mayuresh? And in that light, Shree Cement, which is held out largely as a strong player, especially down south, will see some traction. Do you have an in-house view there?
So clearly, I think the consolidation might still continue in the cement industry, but clearly it is how you're looking at realizations panning out and how you're looking at volume growth. Now, it is all expectations led, at least at this point of time, that realizations will improve over the next few quarters with the push that one really expects from the government side on the infrastructure segment. But clearly, I think we should start improving from the current levels. But clearly, I think if you divide the cement players between the north and the south-based players, I think the north-based players is something that we still continue to like, with the exception of a few mid-cap players. So clearly, I think Ultratech Cement from the large-cap names is something that we like at 71.2 MTPA capacity. Clearly, I think the EBITDA per ton at 889 rupees did surprise us, with power and fuel costs expected to stay benign, with huge consumption of pet coke coming through and pet coke prices actually falling over the last few quarters. I think the numbers would appear far better. And again, I think JK Cement has been one of my favorites. With the white cement capacity, the blended volume should grow at 14.5% over the next 2 years. And again, I think at an EV to ton of $100, I think it looks quite reasonable at the current juncture. So I think a stock-specific approach, but cement generally should do well over the next couple of years.
Okay, we'll take a short break on that note. Okay, in fact, hotel stocks, before we take that break, very quickly, Mayuresh, is this rally sustainable? It seems like the region around Maharashtra will be in focus given the impetus the government is likely to make towards investment in tourism.
So again, I think it's more news driven at this point of time. So let the news actually come through, and then we'll probably take a call. But clearly, I think the hotel stocks are rallying because I think the investors are looking at options, and the options are
Mayuresh, we'll come back to you on that. We'll take a short break right now. When we come back, we'll focus on tomorrow's session, how our viewers can navigate trade tomorrow, investment ideas, trading ideas, all of them coming up next. Here are a few ideas already going into that break from a long-term perspective, some investment themes.
After that Fed hike happens, you might actually see a little bit of short covering happening, and therefore, I don't see a very negative impact after that immediately. I believe that earnings growth for the second half will not be more than 10 to 12%, which will give you a full year earnings growth of 5 and 6%. But that could also lead to further, downgrades for FY17. In the IT sector, we see a lot of fundamental and structural changes happening globally, so that probably will remain to be an underperformer going forward. In the pharma sector, which has been doing extremely well, I think this round of FDA shocks which have come to some of the companies is going to prevent valuations from going to levels they were earlier. So I think pharma is going to be a rank underperformer going forward next year. So if at all the markets have to go up, they have to go up because of domestic sectors, and therefore, perforce you have to buy things like financials, which have a very large weight in the index, automobiles, cement, and FMCG.
I recommend Maltech Technology at around 140. Now, looking at the way the stock has gone up, I still believe that a 5-10% correction notwithstanding, I think the stock is destined for a 500 rupees mark over the next 12 to 18 months. There's a lot of traction happening in the IT division, plus the structured engineering business continues to do well. The company has a relatively small equity if you look at it, around 5 crores odd. The company had an EPS of around 11. This year, this should be a 16-17 rupees earnings, which should possibly go up to at least 25 to 27 in the coming year. We remain solid in our view that this is a stock which, as per our price target, could be over 250, which is more than double over the next 24 to 30 months. I feel that this company is moving up the value chain in specialty chemicals. Its margins are very good, advantage of overall raw material cost price. 400, 450 has become 700 odd, and we continue to have a target of 1,000 rupees for the stock. One of the best players, if you ask me, from the power consumption space, 67 units, which is the best in the industry. Operational leverage, the best. If you look at the capacity, 23, 24 million tons, operating at around 8, 9 million tons. Right. Whenever demand picks up, which should pick up hopefully in the near to medium term, this company is best leveraged operationally.
Welcome back. You're still watching Markets Tomorrow right here on ED Now. Change in non-farm payrolls data for November will be important. Remember also the unemployment data for November would be perhaps the last critical data point that the Fed would need to take cognizance of what they need to do at the next policy meet. Take on board, the state of the U.S. economy and link the stories, because so far the data on growth, on inflation has pretty much been on expected lines. If the unemployment rate also comes in within their comfort zone of around 5% or so, then that would give the Fed enough confidence to actually go ahead with the lift-off plan in its December policy meet. Japan, of course, pretty much the same. You have the unemployment data as well as the non-farm payrolls data also stated to come out there. Mayuresh, you were talking about hotel stocks. Do you think that structurally something is changing in the space, not just in terms of investments, but also in terms of occupancy levels, ARRs, average room rates, in the backdrop of the fact that this is the festive season and, you perhaps might be looking at a pickup in activity there?
So again, Tanveer, I think traditionally a very strong quarter, Q3, for a lot of these hotel companies where you'll see occupancy levels inch up. And clearly the ARRs would also inch up with the year and round the corner. But again, as structurally something changed for the hotel industry or the hospitality industry in general, I do not think so. Clearly, I think investors stroke traders are looking at pockets which have probably not moved. And that is one possible explanation of what you're probably seeing. The state government initiatives on the hotel industry, let them come through. And once they come through, probably one can create a structural view on the industry. However, I think they're technical bets at best. And fundamentally, I think, and structurally, I do not foresee any change happening, at least for the next 2 quarters. because I think the occupancy levels for the entire year will still remain weak. And again, I think the valuations for a lot of these companies are quite reasonable considering the kind of revenues that they are earning.
Let's go across to Kamya Verma, who joins us with a list of stocks to watch out for in tomorrow's session. Kamya, tell our viewers what's on your radar.
Well, first up, let's talk about Havells, and definitely keep that on your radar, as there was a block deal that happened in today's session. And analysts are of the view that the majority of the selling is already over and the stock is only on an up move from here on. And also, marquee HNIs have taken positions in this block deal, so do watch out for Havells. The other counter to keep on your radar is BF Utilities. Street is expecting positive commentary from the analyst meet. Baba Kalyani will be talking to investors, and other than Bharat Forge, analysts are expecting some clarity on business prospects of BF Utilities as well. So expect that stock also to be in focus.
Okay, thanks for that, Kamya. Come to you, Sandeep. Actually, Mayuresh, come to you. Give us your investment bets, top 3 investment ideas that viewers can benefit from.
So clearly from the mid-cap universe, Surya Roshni is something that we are liking in terms of the LED shift and the government focus on the same. I think the lighting industry should do pretty well. Within that, I think the LED segment should contribute 30% over the next couple of years. Fans and other appliances have been doing well, and we expect them to hit that 200 crore odd mark respectively. Again, I think the steel business has been a drag, but clearly I think the lighting business is performing very well, and the debt levels have actually come down by 65 odd crores in the first half. So valuations at 7.5 times look pretty attractive to us at the current juncture. Another stock that we probably like at this current juncture is Visakha Industries. I think a very small cap play, but if you look at their asbestos cement products division, I think that has not been performing well, but the expectation is on the next 2 years with a 70% market share, it should do reasonably better. The V-Boards division has done exceedingly well. The synthetic yarn division has done well. So I think Visakha Industries on declines is something that long-term investors can look at. And the third stock is MT Educare from the education space. I think the kind of top-line growth that one really expects of 27% over the next 2 years should suffice, because the kind of free university tie-ups that it's doing, the RoboMate division, the learning management solutions division, I think all these divisions are expected to perform well, and that will transmit into a bottom line growth of 20% over the next couple of years. So clearly valuations looking attractive for MT Educare even at the current level. So one can look at the stock with a target of 170 over the next 12 months.
Okay, Mayuresh, appreciate your time, your insights. Great to have you on the show. Thanks very much for taking out the time to speak with us and help our viewers approach trade tomorrow. We'll take a break on that note, wrap up the show. But as always, catch you with the markets tomorrow morning at 8 a.m. with the market.